All right, everyone, welcome back to TalkTickers, your shortcut to understanding these crucial earnings calls.
That's right.
And today we are diving deep into the Macy's Inc. fourth quarter 2024 earnings call.
Big one.
Yeah.
Huge retail.
Big one for retail investors and, just to see kind of what's going on in this retail landscape.
Yeah.
So maybe let's just jump right into it with a snapshot of their results.
Yeah, sure. So just at the highest level, Macy's ended 2024 with kind of a mixed bag, I would say. Some clear, bright spots, but also some areas where they're still working through things.
Gotcha.
So their total comparable sales, those saw a slight increase in the fourth quarter, but the core Macy's nameplate, their main brand, still experienced a decline in sales.
Yeah.
However, the Macy's stores that they're really focusing on for the future, what they call their go-forward fleet, those did see positive momentum and actually had pretty good sales.
Interesting. So a story within a story there.
Exactly.
And I guess that kind of leads into the question of how did their different brands perform? They have Bloomingdale's, they have Bluemercury.
Right. So their luxury divisions, Bloomingdale's and Bluemercury, those really stood out. They both delivered really strong, positive, comparable sales growth.
Okay, so luxury doing well.
Yeah. It seems like the higher end consumer is holding up better than maybe some had anticipated.
Interesting.
Yeah. And then on the financial side, they actually exceeded their own expectations for their adjusted earnings per share.
So they beat expectations there.
They did, yeah. And they also generated more free cash flow and ended the year with a healthier cash balance than they had in 2023.
Okay, so financially, fairly strong results overall.
Yeah, I think you could say that.
Now, you mentioned this Go Forward Macy's a couple of times now.
Right.
Can you elaborate on that a little bit more for our listeners? What are we really talking about there?
Yeah, so this is Macy's essentially narrowing their focus. This go-forward strategy, it encompasses about 315 Macy's stores that they've identified as being really crucial for their future.
Gotcha.
It includes their entire digital operation, of course, as well.
Right.
And then, importantly, it also includes all of Bloomingdale's and Bluemercury.
Okay.
Both their physical locations and their online sales. So it's about them concentrating their energy and their investments on the parts of the business that they believe have the most potential.
So really trying to hone in on the areas where they see the most growth.
That's exactly right.
Now, this seems to fit into their bold new chapter strategy that we've been hearing about.
Absolutely. Yeah, this go-forward approach is a big part of their bold new chapter strategy, which is this big 3-year plan that they've laid out. And it's aimed at, serving their roughly 40 million annual customers across all of their brands.
Okay.
And the core idea here is to really elevate the customer experience both in their physical stores and online. They're talking about, shifting resources away from Macy's stores that aren't performing as well and reinvesting in these key areas to drive growth.
So sort of doubling down on what's working.
Yeah, you could say that.
And taking some of that money from places where it's not working as well.
That's right. Making some tough decisions, but trying to be strategic about where they allocate their resources.
So we're about a year into this bold new chapter strategy.
Yeah.
What kind of progress are they reporting?
Well, they seem to be pretty optimistic about the progress they've made.
Okay.
Their overall comparable sales for Macy's Inc. as a whole showed a pretty notable improvement compared to the previous year.
I see.
And if you dig a little deeper, those first 50 Macy's stores that we talked about earlier, the initial batch that received that focused attention and investment,
right,
those actually delivered positive comparable sales for every single quarter of the year.
Wow.
Yeah. Pretty impressive.
So really showing some promise there.
Yeah, absolutely.
What about Bloomingdale's and Bluemercury?
Those also both reported positive comparable sales for the entire year,
right,
with Bluemercury actually marking an impressive 4 consecutive years of growth.
Okay, so that's a solid streak for Bluemercury.
Yeah, they're really tapping into that demand for beauty and self-care products.
Yeah.
They're on a roll.
That seems to be a big trend.
Absolutely.
What about customer sentiment? How are people feeling about all these changes at Macy's and Bloomingdale's?
So they highlighted in the call that they achieved record annual net promoter scores for both Macy's and Bloomingdale's.
Okay.
Which is a key metric that indicates customer loyalty and willingness to recommend the brand to others.
So people are generally happy with what they're seeing.
It seems so,
Yeah.
yeah. And they also exceeded their own target for closing underperforming Macy's stores.
Okay, so they're really moving aggressively on that front.
They closed 64 Macy's stores in 2024.
Wow.
Which was more than the 50 they had initially planned.
So exceeding their targets. And I imagine that contributes to those asset sale gains that we were talking about.
Absolutely. Yeah, that move, while difficult, did contribute to gains from asset sales.
Right.
And interestingly, they also managed to reduce their spending on capital expenditures for the second year in a row, while significantly boosting their free cash flow.
Okay, so it's not just about cutting costs. It sounds like they're also finding ways to be more efficient with their spending.
Yeah, they're really trying to be smart about how they allocate their capital.
Okay, and that's always a good sign for investors.
Yeah, especially in a challenging retail environment.
And then, of course, they also return capital to shareholders through dividends.
Right. Always important to keep those investors happy.
So it sounds like the fourth quarter really built on some of these positive trends that we were just talking about.
Yeah, the fourth quarter was really a strong one for them.
Okay.
The go forward, Macy's locations actually had their strongest comparable sales performance in the entire year during the fourth quarter. Yeah, and when you combine that with the continued positive results from Bloomingdale's and Bluemercury,
Right.
that resulted in the highest comparable sales gain for the entire Macy's Inc. in 11 quarters.
Okay, so a really solid end to the year.
Yeah, you could say that.
Now let's dive into those pillars of their bold new chapter.
Sure.
The first one is strengthening and reimagining Macy's.
Right.
What are the key takeaways for us there?
So while the total Macy's nameplate, all of their Macy's stores combined, still saw a decline in comparable sales during the fourth quarter.
Right.
It's important to note that the rate of that decline was significantly less than the year before.
Okay.
So things are moving in the right direction, even though they're not quite positive yet.
Gotcha.
And those first 50 stores that we talked about earlier,
Yeah.
those were a real standout. They achieved positive comparable sales and consistently outperformed the rest of the Macy's fleet.
Okay, so it's really showing that targeted investment can make a difference.
Exactly. It really underscores that idea that, investing in the customer experience and doing it strategically can pay off.
Even in a tough retail environment.
Absolutely.
What else did they highlight for this pillar?
Well, they also pointed out another 100 Macy's stores where they specifically enhanced staffing in the women's shoe and handbag departments.
Okay.
And those locations also showed stronger sales than others. So it seems like they're really realizing that, focusing on the customer experience in those key categories can drive growth within the core Macy's brand.
Yeah, especially because those are higher ticket items.
Exactly.
So you want to make sure that people have a good experience and feel comfortable making those purchases.
Absolutely. Yeah, you need those salespeople to really provide the service and the knowledge that customers are looking for.
Okay, and then of course, closing those 64 underperforming stores, that's a crucial part of this pillar as well.
Right, allows them to really concentrate on their more profitable locations.
And what about Macy's online presence? I mean, that's such a critical part of the retail landscape these days.
Yeah, absolutely. Their digital performance is key.
Right.
And they reported positive comparable sales growth in their digital channels during the fourth quarter.
Okay, so doing well online.
Yeah, they attributed this to several factors, including improvements to their website, navigation, better search engine optimization, more competitive pricing strategies.
Yeah.
So really focusing on all the key elements of e-commerce.
Right.
Their marketing efforts also saw a shift towards more engaging content like live events, partnerships with popular TV shows, collaborations with social media influencers.
Okay, so trying to be more creative with how they reach customers online.
Yeah, they're really trying to leverage that existing recognition of the Macy's brand and make it more relevant in the digital space.
Okay, so the second pillar is all about accelerating and differentiating luxury.
Right.
With Bloomingdale's and Bluemercury in the spotlight.
Yes.
So tell us how those higher-end brands are holding up.
Well, both brands continued their trend of strong, positive, comparable sales. Bloomingdale's actually achieved its highest sales volume for a fourth quarter in its entire history.
Wow, so a really impressive quarter for Bloomingdale's.
Yeah, they credited this to some successful initiatives like their tie-in with the Wicked musical and their From Italy with Love program.
Interesting.
Both of which clearly resonated with their customer base.
Okay, so tapping into those cultural trends.
Absolutely.
And what about their physical footprint? Are they expanding or contracting?
Well, they're actually expanding Bloomingdale's.
Okay.
They opened 3 new stores, including an interesting women's-only concept.
Interesting. So trying some new things there.
Yeah, it'll be interesting to see how that performs.
Yeah, definitely.
And then Bluemercury, of course, they've been a really consistent performer for quite some time now.
Right.
And they achieved their 16th consecutive quarter of positive comparable sales growth.
Okay, so they're just continuing that momentum.
They are, yeah. They're really tapping into that ongoing demand for self-care products and beauty trends.
Yeah.
And they're also continuing to grow their physical presence with new and remodeled locations, updating their store design and service offerings to stay ahead of the curve.
Okay, so really investing in that brand.
Yeah, they seem to be doing all the right things.
Now, the final pillar is simplifying and modernizing end-to-end operations.
Right.
So this is where they're focusing on the behind-the-scenes stuff.
Yeah, this is all about improving efficiency across their entire operation.
Okay.
So they're talking about, getting online orders delivered faster, ensuring shelves in physical stores are better stocked, reducing the time it takes to ship orders placed online.
So the nitty-gritty of running a retail business.
Exactly. Yeah, the stuff that customers don't always see, but that makes a huge difference in their experience.
Right.
And they've also maintained a really strong focus on managing their inventory effectively.
Okay, which is so important in retail.
Absolutely. Yeah, you don't want to have too much of the wrong stuff or not enough of the right stuff.
Right.
So they've done a good job of improving their inventory mix, and they have fewer older unsold items sitting on shelves.
Okay, so they're being very strategic with their inventory management.
Yeah, they're taking a data-driven approach.
So let's shift gears a little bit and look ahead to the current fiscal year, 2025.
Okay.
What's the overall picture that they're painting for the year ahead?
So for 2025, they're really focusing on two key metrics. The comparable sales performance of those go-forward Macy's Inc. stores.
Right.
And their core adjusted EBITDA, excluding any potential future gains from selling off assets.
Okay.
So given the broader economic uncertainties that are out there, their priority is really on the performance of these core future-focused parts of their business.
So really honing in on what matters most.
That's right.
Are there any changes in their approach to spending on the business?
They're planning to continue their trend of reducing capital expenditures,
Okay.
but they're being very strategic about where they do invest.
Gotcha.
Prioritizing projects that they believe will generate the highest returns.
So being more selective with their spending.
Yeah, exactly.
What about these specific plans for the Macy's nameplate?
So for the Macy's nameplate, the strategy is really centered on driving growth through a smaller but more productive group of stores.
Okay.
And they're looking to expand that reimagined store concept that seems to be showing some promising early results.
Yeah, so taking what they've learned and scaling it up.
Exactly.
Okay.
Fiscal year 2025 is also significant because it's the first full year where Macy's will be using a more detailed cost accounting system.
I see.
They're expecting this to give them better insights into their buying decisions and ultimately improve their overall execution.
So kind of getting a better handle on their costs.
Yeah, exactly.
What about their product assortment? Any notable changes there?
They're really emphasizing how they're evolving their product offerings, including making their private label brands even better and bringing in relevant national brands that customers are looking for.
Okay, so trying to find that sweet spot between their own brands and the national brands that people know and love.
Exactly.
Okay, what about their marketing strategy for the coming year? Any shifts there?
They're aiming for a better balance in their marketing efforts.
Okay.
Trying to connect with a broad audience to build brand awareness while also using more targeted performance-based marketing to drive sales.
So kind of a two-pronged approach.
Yeah, exactly.
Okay, and they're going to continue leveraging those iconic Macy's events like the Thanksgiving Day Parade.
Right. Those still hold a lot of cultural cachet.
Yeah.
For Bloomingdale's, the focus will remain on those unique collaborations and partnerships with other brands.
Okay.
And then Bluemercury will be exploring new brand partnerships and further expansion of its store network.
Gotcha.
So each brand has its own tailored marketing strategy.
Right. And then behind the scenes, are there any updates on their infrastructure, like their supply chain?
Yeah, their new distribution facility in China Grove is still on track to open in the middle of 2025. They anticipate that this facility will lead to some significant improvements in their supply chain efficiency across all of their brands.
So that should help with their costs and their delivery times?
Absolutely. Yeah, it's a big investment, but they're expecting it to pay off in the long run.
Okay, so overall, their outlook for 2025 seems pretty measured.
Yeah, they're acknowledging the potential headwinds in the broader economy,
Right.
but they're also reiterating their commitment to a balanced approach to managing their capital,
Gotcha.
which includes the possibility of buying back shares and continuing to pay dividends.
Well, keeping those investors happy.
Exactly.
Let's get into some specifics.
Okay.
Can you give us a sense of the specific financial targets they've laid out for this year?
Sure. So they're forecasting net sales to be somewhere between $21 billion and $21.4 billion.
Okay.
For comparable sales across Macy's Inc., they're expecting a decrease of 2% to 0.5%.
I see.
With the go forward, Macy's store is expected to be down roughly 2% to flat. They do anticipate an increase in other revenues, largely driven by the performance of their credit card business.
Okay.
They're also projecting a slight increase in their gross profit margin.
Gotcha.
But they expect their selling general and administrative expenses to decrease in dollar terms, although they might increase slightly as a percentage of their overall revenue.
Okay. So a little bit of give and take there.
Yeah, exactly.
And what about their earnings guidance?
They're projecting adjusted diluted earnings per share to be in the range of $2.05 to $2.25.
Okay.
And that's excluding any potential impact from share buybacks.
Okay.
Their planned capital expenditure for the year is around $800 million.
Oh, okay.
And then if we look at the very near term, for the first quarter of 2025, they're expecting net sales of $4.4 billion to $4.5 billion.
I see.
Macy's Inc. comparable sales to be down 4.5% to 2.5%.
Okay.
Core adjusted EBITDA margin of 6.4% to 6.6%, and adjusted EPS of 12 cents to 15 cents.
Okay.
So those figures reflect the current economic pressures that they're seeing.
All right. So they're expecting a bit of a slower start to the year.
Yeah, that seems to be the general consensus among retailers.
Now, the Q&A session of an earnings call can often be really telling.
Absolutely.
Were there any particularly insightful moments from this one?
Yeah, there were a few things that stood out.
Okay.
Management expressed a really strong belief in their bold new chapter strategy.
Yeah.
And they clarified that their somewhat cautious outlook is partly due to the fact that there's still a significant portion of the Macy's store fleet that hasn't yet gone through this reimagining process.
So there's still more work to be done.
Right.
And I guess that makes sense. You know,
Yeah.
they're doing this in phases, so they're still working through it.
They also emphasized that any cost savings that they realize from closing stores are being directly reinvested into improving the experience for their customers.
Okay, so they're really trying to make the most of those savings.
Yeah, they're not just pocketing the money, they're putting it back into the business. They also highlighted that carefully managing their inventory, through offering the right variety of products, introducing newness, and ensuring efficient allocation to stores, that remains a top priority for them.
Right, because inventory management is so crucial in retail.
Absolutely.
And how do they see the current consumer environment?
Their assessment is that it's quite similar to late 2024.
Okay.
With consumers still feeling the pinch of inflation, but still willing to spend on discretionary items occasionally.
Right. So maybe being a little bit more selective with their purchases.
Yeah, exactly.
Sure.
They anticipate that the retail environment will remain competitive in terms of promotions, but they feel comfortable with their current inventory levels and the types of products that they have on hand.
Okay. So they're not feeling too much pressure to discount heavily.
No, they seem pretty confident in their position.
And were there any particular product categories that they highlighted?
Yeah, they noted that they're seeing some really strong performance in areas like ready-to-wear apparel, beauty products, and their luxury segments,
Right.
while the home goods business continues to face some challenges.
I see.
So kind of a mixed bag there, but those are some of the key categories to watch.
Right.
They also reiterated that the comparable sales of those go-forward Macy's stores are the key metric that they're focusing on to gauge future performance.
Right, because that's really where they see the future of the business.
Exactly.
Okay.
And they do expect some headwinds to persist in the first quarter of this year, but they're hopeful for improved performance in the later parts of the year.
So maybe a bit of a back half weighted year.
Yeah, that's what they're suggesting.
Okay, what about their private label brands?
The effort to reimagine their private label brands is an ongoing process.
Right.
And they anticipate that new product launches in this area will contribute to both future growth and better profit margins.
Okay, so that's something to watch.
Yeah, definitely.
What about their credit card business?
So they're seeing stabilization and even potential growth in their credit card revenues.
Yeah.
Which they attribute to healthy management of their cardholder portfolio and initiatives aimed at encouraging greater card usage.
So that's a positive sign.
Yeah, it's a good way for them to generate additional revenue and build loyalty with their customers.
Right.
And finally, they reaffirmed their commitment to closing approximately 150 underperforming Macy's stores by the end of fiscal year 2026.
Okay, so they're not done yet.
No, they're still in the process of right-sizing their store fleet.
So for anyone listening who's trying to understand the bigger picture here,
Yeah.
what's the key investor context around all of this information?
So this earnings call really gives us a window into how a major department store chain is navigating, a pretty complex and evolving retail landscape.
Right.
The clear emphasis on those go-forward Macy's stores signals a significant strategic pivot towards their strongest assets and a more targeted customer base.
Yeah, they're really trying to focus on what works.
Exactly. The consistent success of Bloomingdale's and Bluemercury really highlights the value and the potential that their luxury offerings bring to the overall company.
Right, so that's definitely a bright spot.
It is, yeah.
And while their financial outlook acknowledges the economic uncertainties and the impact of store closures,
Right.
it also underscores their efforts to improve their profitability through these, focused strategic initiatives. So they're trying to control what they can control.
Exactly. And
Right.
I think for investors, the key will be to closely track the progress of this bold new chapter
Right.
and how it impacts comparable sales and their bottom line in the quarters to come.
So staying tuned for further updates
Absolutely.
and paying close attention to those go-forward Macy's stores.
Yeah, that's the key metric to watch.
All right, so now for our segment where we put on our This Is Not Financial Advice hats
Okay.
and brainstorm some, let's call them outrageous but plausible trade ideas based on what we've heard.
I like it.
What are you thinking?
All right, so here's one. The market might still be a bit lukewarm on the core Macy's turnaround story,
Okay.
but what if Bloomingdale's and Bluemercury just keep knocking it out of the park?
Right.
So here's an idea, a pairs trade we could call the luxury lift long shot.
Interesting.
So you would go long on a carefully selected group of publicly traded luxury retail companies, ones that aren't as exposed to the headwinds facing mid-tier department stores.
Okay.
And then you'd take a smaller, more targeted short position in Macy's Inc.
I see.
The underlying idea is that the market might be underestimating the intrinsic value and future growth potential of Macy's luxury brands as the core Macy's business stabilizes.
So kind of betting on a divergence in performance.
Yeah, you're betting that Bloomingdale's and Bluemercury will continue to outperform while the core Macy's business lags.
Gotcha.
It's a contrarian play hinging on those luxury banners continuing to outperform and the successful execution of Macy's broader strategic shift.
Okay, so high risk, potentially high reward.
Exactly. Yeah, if that divergence continues, it could be a very profitable trade. Okay.
But it's definitely not for the faint of heart.
All right, I like it.
Right.
You got another one for us.
All right, here's another angle playing on their real estate strategy.
Thanks.
So they're closing a lot of stores and seeing significant gains from selling those assets.
Right.
And they're projecting more of that in the future.
Yeah.
So this idea, we'll call it the real estate unlock arbitrage,
Okay.
involves taking a long position in Macy's, but with a very tight stop loss to protect against further core business weakness.
So managing that risk.
Yeah, absolutely.
Okay.
The real work here would be in doing some deep fundamental research into the actual underlying real estate value of both the go-forward stores and the ones they've closed or plan to close.
So really digging into the books.
Yeah, you got to do your homework on this one.
Okay.
The outrageous part is speculating on a future scenario where the total value of Macy's assets, including its potentially undervalued real estate holdings, becomes significantly greater than its current market capitalization. So essentially betting that the sum of the parts is worth more than the whole.
Yeah, exactly.
And that could be triggered by more strategic asset sales.
Right.
Maybe even a spin-off of the more profitable Bloomingdale's and Bluemercury brands.
Absolutely.
Or perhaps some activist investors coming in and pushing for a greater realization of that real estate value.
Yeah. That's always a possibility.
Yeah.
So this is definitely a longer-term, value-oriented speculation with significant potential upside.
Right.
But it comes with substantial risks related to execution market sentiment and the overall economy.
So a lot of things have to go right.
Yeah, it's a high-risk, high-reward kind of play.
All right, well, that brings us to the end of our deep dive into the Macy's Inc. fourth quarter 2024 earnings call.
It's been a journey.
Yeah, we've unpacked the key results in their bold new chapter strategy and their outlook for the year ahead.
A lot to digest.
Yeah, a lot going on with Macy's.
Absolutely.
So just a friendly reminder that those trade ideas that we tossed around are purely for informational and entertainment purposes and should not be taken as financial advice.
Definitely not.
Always do your own thorough homework before making any investment decisions.
Couldn't agree more.
We'd love to know what you think about Macy's bold new chapter.
Yeah, what are your thoughts?
Do you see Bloomingdale's and Bluemercury continuing to be the powerhouses?
Let us know.
Share your insights with us, and make sure to join us next time on TalkTickers for another insightful breakdown of a crucial earnings call.
See you then.